folks, I'm Melly Little, and this is your daily TA wrap. We take a look at these markets, and we do it from a neoclassical perspective, asking ourselves each day what happened today, and what does it tell us about tomorrow. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, I hope you had a great Christmas. Enjoyed a little time off. They didn't give us a lot of time off. Had to go back to work today, but it was a little bit of a time off. It's kind of interesting that the markets tend to not close very much, and when they do, you kind of wonder sometimes why they don't just close a little bit longer. I don't know if Europe is actually open tomorrow or not. I thought they were, but then I read something later today suggesting that they weren't. So I guess I'll see tonight when they come online or not. As far as our markets, another day of stretch. I mean, you know, Santa Claus, all the stuff they talk about. You know, we're stretching right on up there until the end of the year, it looks like, or at least trying to. Most of the money poured into the big caps today. Today was a rotation back to the ones that were ignored the last couple of days. Instead of NASDAQ, we went back over to NYSE. We got 122 higher on the Dow, 16,479, 16,480 roughly. S&P stretch another 8 3/4, 1842. Remember, the target here was about 1850 on the range trade breakout. There was an 1859 target from a long time ago when I had looked at some weekly projections. It was either weekly or daily at the time, I forget when. I'm not sure that those actually hold anymore, so I'd have to go back and revisit them. They were in one of the articles I did for Market Watch. But the 1850 number I know is real. 49 to 50, we're at 42, we're 7 to 8 points away, so not that far now. Composite, and remember those numbers when we were talking about them, the 1859 number, that was like a 4% jump, and that was the middle of November when I wrote that article. On the NASDAQ, it was about 5.5%, and the NASDAQ's even closer. So in the last month, a little over a month, 5 weeks, you know, we've tacked on a percent a week, essentially, in the NASDAQ. It's been an amazing run again. 11.73 higher, 11.6 higher, 41.67 on the NASDAQ, just 1/4% higher. NDX, 1/3% higher, tacked on 11 3/4, 35.84.5, and the Russell actually was lagging, just barely broke even, up less than a buck, 11,062 and 64 cents. We had gold up, although it kind of settled back down towards the end of the day. We had the silver was up quite a bit more. Oil, copper was up. Oil was pretty flat, I think, if I remember right. UUP, the dollar, was a little bit down today. The big news today was actually on the bonds, and I'm looking at these and scratching my head because I don't think this is right. It's almost like it didn't get updated today. Bonds were down about 1/4% today. Moving over to the markets and to the actual indices, we have a stretch, right? We got a nice stretch going here on the Dow, just pushing higher. I got the wrong charts here. Let me grab the other one. And where is it? Come on. Here we go. So, maybe not. Do it this way. So on the Dow Jones, we push higher, right? Nice big spike up. Of course, there is no volume at this point in time, but it doesn't matter. This thing's stretching. This is 4 bars breakaway after 2 swing point highs were broken. So you can see the sort of extension in the direction of the trend. Nice big move up. Really not much more to say other than that. I mean, it's just stretching higher. And the SPX did the same thing. So when we pop over and look at it, you're going to see the same sort of thing taking place here. Your 4 bars now stretched on this move on the breakout. The one that was struggling today was the Russell. The Russell actually did an over-under but the volume was higher, so you can't really call it a two-bar reversal. But you know, you can see it's kind of struggling here. I'm gonna go back and see if they ever cleaned up these quotes. Matter of fact, let's just do it real quick together here. This is a different charting system. Let's see if they cleaned it up on this one. Still got the same problem. That's amazing, because that I don't think we really traded up there. They opened it like 5% higher that day, but I don't think it really traded there. And sometimes quotes just don't get cleaned up, and that's unfortunate. But you know, it's still there. I'll have to look at another system or two and see if anybody cleaned it up. NDX. Let's look at that one. So on the NDX, you just stretch higher. 3 bars now on a stretch after the breakout, 4 bars including the breakout. And if you look at the IXIC, you got pretty much the same thing, right? Stretching higher, 4 bars including the breakout bar. We're at a point, and we talked about this, I think Tuesday night, or was it Monday night? We're at a point where you could get a small retrace at any point now, right? Because you've done the immediate thing, and that is you've stretched in the direction of the breakout. The thing is that these things are going to go try to hit their targets, and they may get a little pullback in front of that. And we'll just use this chart as an example. They may get a little pullback in front of that to set up some sort of an ABCD structure to go higher, or they may just climb straight on up there, right? There's nothing that says it has to stop. I mean, it can just climb up and hit the target. So, you know, right now it's on a climb. It's trying to get up there. There's nothing in these charts to tell us anything different, right? You're stretching towards the targets, and there's just nothing here to stop it yet. Where there is on the OX market. So let's pop over to the OX markets. And just like we looked at, if you remember about a week and a half ago, or maybe 2 weeks ago, we were looking at Europe and the issues in Europe. Those got swept under the rug once we broke out, right? When we did our breakout bar here, that flipped Europe around. And matter of fact, if you were to look at Europe, you'd see the kind of stretch that it's had, particularly in the German market, but through all the major markets. The problem now is the same sort of problem we had then, and that is now we've got to up and become real, so to speak, right? Actualized. And that issue is the bonds. So when I look at the TLT, I look at this low is 102.16. Today we broke under it. And no, we don't have the volume. We closed at 102.12. We're doing 3.2. The volume over here is about 8.5, 9, almost 9. Right? So you're cutting under it with two-thirds less volume. That says that it probably shouldn't, hold, or it should at least come back for a quick retest. Now, if you come back on a quick retest regen, you have a lot better probability to get higher. The real issue here is not this break today, but what does it do tomorrow? Because tomorrow's Friday. And if I pull this back and put it on the weekly, you can see on the weekly, you're also going to get a break as a result of this, if in fact it breaks, right? And because the low's over here, what do we got? 102.11, and I believe it's the same. 102.16 over here. So we're slightly, because these bars is this one over here, 102.16. So over here you got 102.19, 102.11, and I think this one's higher, yeah. So 102.11 is the magic number on this time frame. It's this swing point low that there's a low right there. It's highlighted. 102.11, 102.16. We're at 102.12, was it? Yeah. So we're 1 penny above the weekly. We're underneath the daily. Tomorrow, and we've already had a nice big fast push. So tomorrow is going to be the critical day, in that if this can't rise back above, right, then what do you got? Well, you got a break, a swing point here, and potentially if it breaks a swing point over here, that's going to be multiple swing points on multiple time frames. That usually leads to a fast move to the direction of the trend, right? Which in this case is down. That also puts into motion some larger ABCD structures to try to get lower. For example, here you've got an ABCD structure that's not that much, but it would get you down to somewhere in there. If you do it over here, you really don't have it here. So, you know, it looks to me like this thing's going to try to break, but there's no volume at this time of the year. But then again, that could actually work against this. But you could get 2 to 3 bars break on the downside. Now, what is that doing? It's actually taking your rates and moving them higher today. If we go over and look at the 10-year note, the 10-year note is at 3%. And 3%, there's nothing magic about 3% other than the fact that 3% is a round number, and we haven't been there in a long time. This is on the 10-year note, the 7 to 10s. Now here we actually just finished off an ABCD structure on the daily. So you had a grab my tool, here we go, I think, if I can get it. And there it is. So we got an ABCD structure here just finished off. And we don't even have an ABCD structure here on this one. It never set up on the way down. So the only ABCD that's in effect is actually from here on the weekly back up and then would be back down, and that would take it to about 94, it looks like. So finished off an ABCD here, potentially could break an ABCD here and create an ABCD structure on the way down. I'm not going to belabor the point, but bonds are an issue. I've talked about them before. They're starting to fulfill their breakdowns. If these really start to move to the downside and rates move to the upside, it's going to be hard for these equity markets to keep ignoring it. You can ignore it if they it's just like gasoline if you think about it, right? Do you stop buying gasoline? Well, it's a little different, right? Because in gasoline you got to buy it, but you do find ways to try to cut back. Maybe you don't go to the store quite as much or something, right? In cumulative effect is you cut back. But you only do that after it becomes kind of shocking, like when it goes over $4 or something like that. And it's the same sort of thing here. Probably a better analogy is if you think about the Federal Reserve, and used to in the old ways, the Fed would actually raise rates instead of the market raising them. And that's just because now they've depressed them under market levels, under the real rates. So the market is actually just trying to bring them back to something normal, despite the Fed. But in the old days, the Fed would actually raise the short-term rates, and it would take 2 or 3 times for it to make a dent, right? In other words, it would have an effect. The first time they raised it, yeah, you'd get a sell-off in the market, but it'd come right back. The next time they did it, you'd get another sell-off, but it'd come right back, right? And about 3 times in, there used to be a thing about, I don't know, it had something to do with the 3, an old saying. I can't think of what it is right now. But, 3 times was the number. And if you think about what's happened here, is you've gotten 3 times, I mean, not 3 times, you've gotten 1 time already. Potentially you're going to get another time. And then, the third one would probably be the charm here, just like in the old days. So I don't think it's a catastrophe. I don't think it's going to kill the market. Can it set it back? Yeah, it can. Can it stop this advance? Yes, it can. Does this advance want to finish off its structure? Yes, it does. Another 8 points on the S&P. That's just, the probabilities are pretty good now that it's going to go do it because it's far enough up there. It's just that this is, you're always looking for your worry points. This is the worry point. Gold got a bounce up today, and it bounced right into the bottom of the swing point low. 1723, got to 1723. Okay, so what is that? That's a retest regen off a prior swing point low, and so far it's a success in the sense that you come down, right? You had an ABCD structure, you finish it off, even more than off. Now you're getting a bounce, right? And it's going to try to regenerate lower. That's what it's going to try to do. So today you go up, you actually test it. A lot less volume. Of course, everything's a lot less volume right now. You got a black candle there. It couldn't get going, right? And now it's going to try to regenerate back to the downside. So gold tomorrow, Friday, usually big days in gold if you're going to have a big one. Tomorrow is a big day for it, given what happened today, and that is that it needs to get back up and into that bar and test into it. If you go over and look at silver, silver actually had a better day, but silver's been acting better all the way down. Going back to gold real quick, because I actually missed another point I wanted to mention here, is that gold on the weekly is actually trying to come in and test these swing point lows, right? And that low is 114.68. We touched it last week. We're trying to come back in and do it again. Doesn't have to at this point, but you can see, that's kind of the line in the sand. I mean, this thing really can't give up this line. If it does, it's got even worse problems that it already has, and the problems it has are already pretty bad. So critical area here, you don't want to see gold break. So if this does retest and regen successfully and break down, that's going to bring it down into this area, and it's going to be a full-fledged breakdown at that point. That's your gold market. Going back to the bonds, one other thing I'm noticing still is the municipal bonds continue to sell off. So if you look at this market again, this one's doing the same sort of thing, and these structures they set up over and over again, and the ABCD structures, and a lot of people use different projection techniques. This happens to be one of them, but there's ABCD structures over and over. That one actually fulfilled faster or farther than the normal count. But here's another one taking place right now. It projects to about the bottom, which is actually the last area of decent support. And the municipals are trying to come all the way back. They're trying to come all the way back and test this area. And potentially, you got a big high volume low down there. It looks to me like it's going to try to work its way down there before it's over. So when you get fast moves down, I talk about the breaking multiple swing points. You can see the break here. It also broke multiples on the daily at the time. You can see what kind of fast moves you can get off of that. Now when you do that, of course, you stretch to the point where you get a fast rebound, right? Then you come back down and you try to test. Well, this one didn't get to the bottom, so it wasn't a full-fledged test. So you bounce back up, you do your range trade. Now it's going to try to drift its way back down here and get back down here and test it again. It's going to take it a while, probably, unless general bonds start to fall out of bed. But that's the way it's set up. There's really not much to look at with respect to the not currencies, but the major sectors. I was glancing at these right before I started on the air here. The only thing I saw that was significant was the XLE broke out today over that swing point high. It's been testing. So it got over it yesterday, breaks out today. It's going up to try to test the next one. And it actually had decent volume. Big piece of this is, Buffett's bought into ExxonMobil, and naturally ExxonMobil's running like crazy. So the Buffett buy is in effect here. And how much farther they'll stretch this one, I have no idea. But, if you look at it on a weekly, you can see what kind of effect the Buffett buy signal had. As a matter of fact, here you got an ABCD structure on the way up, so I guess you could project it here. So that's a pretty good move still. So if it makes it up to there, this one, the ExxonMobil's the largest weighting in the XLE. So if it gets up there, that breakout will occur. The other part of this that I saw that was interesting was the XLP and XLU. With the interest rates doing what they're doing, XLP can't move and XLU is getting clobbered. So XLU's coming all the way back down. It's in this little range, but it looks to me like it's going to come back down and try to test these again, and that would turn it bearish on the intermediate. And it's getting close enough to where you can actually get, and we haven't had a sector do this yet, but I'm going to pull this over and show you the monthly. And this has been the weakest sector, but you do have a swing point low that's not all that far away, and there's two of them down there. So if this does work its way back here at some point, that would be a major breakdown in one of the sectors. And I don't know that changes things all that much, because this one's been struggling for quite a while. But as I've always said, once you get one or two of them, you tend to get others that follow. So it takes, we got 10 sectors. It takes about 2 to get the momentum going. And you got multiple swing points here that if they break, can drive you back down to that lower level on the monthly. So I got a question over here. Let me shoot the questions, and actually let me check and see if there's others as well, so I don't forget anybody. So bear with me a second here, and let me see if anybody's text a message in or not. It's kind of that slow part of the year, so no text. And let me see about email. No emails. Okay, cool. So let's take the boards here. Will you consider taking more short positions in bonds, metals, if treasuries and metals break? Yeah. I mean, I think bonds, if they break on multiple swing points, if gold breaks on multiple swing points, yeah, it can get a faster move. And if you're going to short something, you want to short stuff that's weak. So yes, I mean, that would be the place to look. Right now, it's pretty hard to short this market. I mean, it's almost like a death wish to short this market, especially with the grind into the end of the year. So if you take a short here, you got to really pick your spot, and you can't hang there too long. I mean, if you're wrong, you're just going to have to get up and get out of the way. But it's a pretty good grind going on here. I think there's a decent chance this thing could get a little bit of a pullback. If bonds start to move, I think it's going to make equities pull back. That relationship is pretty strong. And if you get yields going up to places they haven't been in a long time, it will cause people's eyebrows to raise and for them to get a little bit more careful than they are right now. So yeah, I think it will be an issue if in fact it happens. But it's got to happen first, right? Because think about the other side. I was telling folks in the trading room today, and I want to go back to the bonds here, so let me pop over here real quick. If you think about, I mean, there's always two sides to a trade, right? And so if you're looking at this, and I'm going to pull this in, and we'll just look at the daily. I mean, this is a test, right? Had it held today, it would have been a test and a failure to break lower. And that could lead to that, it would have been a lighter volume, would have closed over it, and that flip side of that trade would have been, okay, I tested and there were no sellers, right? So I'm gonna go back the other way. Well, it just so happens that it does break and it stays under it, right? So now becomes the big day tomorrow over here on the weekly, right? Because on this weekly now, if you get a break on the weekly, now you've got a break on your daily and your weekly, and you should get some sort of a fast move off of that. The flip side of that is, let's say it gets under the weekly, because it's not going to have the volume, and comes back over it and closes over it tomorrow. So you go under it, back over it, you close over it. That would probably end up bringing the daily back over it as well. And then what does that do? Well, that's a test on the weekly that fails on lighter volume, and you know, it's basically saying there are no sellers down here. If that were to happen, right, that's actually bullish for the markets and of course for bonds. So you can see how that trade, you know, when you get to the edges like this, right now, you know, it's a range on the weekly. You had a range up here to start with, then you got your break, right? Now you got a range down here, and within it you've got two. You got the top range and the bottom range. Well, it tried to get into the top range here and couldn't. Now it's down at the very bottom of the bottom end of the range. Is it going to set up a new range down here, right? Which would be half of that size to start with? Or is it going to hold and simply work its way back up to the top of the range? That's really the key. Equities, of course, want the latter. They want it to hold, flip back around, work back to the top, let the equities continue to work. Okay, I'm about out of time, and actually I'm pretty tired, so I'm going to leave it at that. And tomorrow, you know, a couple of areas that are kind of big. Gold for its trade, and certainly here on the bonds. If the European markets open, the CACs and the DAX will be very useful to watch. Over in Asia, China's still struggling, although, you know, they're flooding them with money again, so they're bringing the short-term rates back down. Seems like every 2 or 3 months that happens. And if you think about it, I guess it makes sense to happen every couple months or every 3 months, because what happens is all the short-term financing over there on the shadow markets, you know, that stuff rolls every 3 to 6 months. In other words, they've got to reservice them, right? You got to service that debt, and you got to roll it every 2 or 3 months. And if you're having liquidity issues, and it's the end of year over there, you know, their first of the year, I think, if I remember right, is, when I was in Taipei, it was like, what was it? It was like early February, if I remember right. So, you know, they're getting to the end of the year, they get the liquidity cash problems end of the year as well. So we'll see. China, CACs, you know, China, everything seems to be, other than the bonds, seems to be external to us, because right now we don't seem to care about anything other than going up. So, folks, have a great one. Thanks for being here. Tell a friend, tell two. There's actually a program for you. If you do tell somebody, you can earn yourself some dollars. You just come in here to let me see, subscribers, earn subscriber dollars. If you want to get a subscription and you want to get it for you know, multiple months for nothing, you know, tell me about somebody that may be able to benefit from what we do, and we'll take and contact them and see if we can get them interested. And if they do, then we give you subscriber dollars. You can earn yourself free months. I'm going to leave it at that. Have a great one, folks. Take care of yourself. Good night.